Hey everybody, happy Thursday. My name is Lawrence. This is the Financial Thing, peer-to-peer lending investment, and other things live stream. We are live in Orlando, Florida, very, very muggy, hot Orlando, Florida, where it's 2:30 p.m. in the afternoon. I know in the UK it's 7:30 p.m. So welcome to everybody who's joining. And if you're watching in the future, welcome to the future people. Hope you're having a great week. We got some interesting topics to go through tonight. Of course, we'll do some news as we always do. We'll talk about LoanPad, folk to folk. We'll look at the Lend Invest platform monthly fact sheet that they send out, which I always find pretty interesting. A couple of really interesting emails that I've gotten over the last couple of weeks. Go through those. Maybe take a look at the Trading 212 portfolio. Usual kind of stuff. Please hit that thumbs up if you can. Helps out the stream a lot. And I'm going to be talking about the future of the live stream too, and what I've been thinking about doing. I don't know if I'll do it or not, but we shall see. It's kind of been weighing on my mind for a while, what to do with the stream, for a couple of different reasons. So I might go into that if we have time. If not, maybe next week. Let's get straight into it. Thank you everybody for joining, and if you want to leave a comment in the chat or you have a question, please do so. Hello, Paul Bagworth in Kenilworth. Mr. Helian's in a very breezy, sunny Scotland, and Peter Vince is here in Leatherhead in the UK too. Warm and a bit fresher. It is so warm here. It just feels like Hades. It is hot, hot, hot. If you're ever thinking about coming to Florida, recommend don't do it in the summertime. I think it just seems to be getting hotter and hotter every year, but the warming is no such thing, right? Anyway, we're going to get right into it. Let's take a quick look at LoanPad. We haven't looked at their stats in a while, and this is actually going to go in tune with a question that I have later on in the stream that I'd received through email. But they seem to be continuously growing, £206 million loan value, with a total of £150 million of total LoanPad loans, with a total security value of $258,629,000. Average loan to value still a hair under 45%. 272 live loans. Interesting number right here, the one to pay attention to. Right here, 6,174 total lenders, which is definitely upticked. I think the last time I looked at this, they were about 5,900, so they've added a couple of hundred more, close to 300. Average lender investment size has upticked too, I think for about 16,000 to 19,000, so positive. Estimated time to sell, it's always been this way since launch, less than a day. And estimated time to invest less than 1 day. Of course, they have gotten rid of the £10 minimum reinvestment amount. So now I would imagine that's become more of a popular thing through LoanPad now. You can get your money invested straight away every day instead of having to wait till you got £10 of interest paid in before it redeploy. So the cash drag has been reduced. Major benefit. Interest coverage fund, £42,322, which none of that is being utilized. And we've had 686 LoanPad loans repaid since inception, I think 2019, if that serves me correctly in my memory, and £380 million of LoanPad loans since inception, with $264.7 million paid back of repaid LoanPad loans. Of course, the most important thing of peer-to-peer lending is, can those loans be repaid? And I think LoanPad is showing over the now 6th year in operation that they have been able to pay back the money. they've been able to retrieve the money that has been lent out. So very positive. I continue to enjoy LoanPad. Folk to Folk, as we spoke about last stream, reported a record £5 million of turnover as investors earned £17.3 million. That's pretty good. Pre-tax profits $1.84 million. So they're doing well. It's the 6th year that Folk to Folk has been profitable. They've lent more than $750 million to British businesses, with now the total exceeding $772 million. Folk to Folk, interesting. I always get asked, why do I not invest in Folk to Folk? I think they have a good business model. No, this is not financial advice, as I always say. This is the main problem for me here. You got to invest from 20,000. I don't personally want to put 20,000 into one platform. I am not the King of England, where I can just shove 20K in. Some people higher net worth. You can get fixed interest rates from 8.75% paid monthly, secured against UK land and property. No investor losses to date, and they do have an IFISA. But I think this is the thing that stops most people from going through Folk to Folk is the 20,000 minimum. It is a lot. A lot of people just don't want to take that risk. They prefer to try the platform for less money, and unfortunately you cannot do that. But they're obviously doing something right. They're able to have a net profit of pre-tax profit of 1.84 million, which is what you want to see. And so investors are doing well. 17.3 million of interest during the 12-month tax period of 2024 to 25. So long may it continue, huh? Estate Guru. These are the Estonia-based crowdfunding platform that likes to report things. So they saw a 35% drop in loan originations in May as land lends record amount. I don't know what that means, but the company issued 3.65 million euros in loans in May, down from 5.6 million the previous month. So quite a lot anyways. They say that the decrease in May was mainly because fewer loan applications met its credit standards during the month. And actually, I think this is a good thing. You like to see, of course, growth within these companies, but when you see these drops and the company does report that the credit standards is maintaining and new loans are not being written because a lot of the loan applications that are coming in are not meeting their credit standards, I think that's a really positive thing to see. It says during May, Lithuania led the way with 1.37 million euros and Estonia with 1.34 million. I have not ever lent through Estate Guru. It says that farmers borrowed 1.417 million euros throughout the platform across 43 projects. Kind of cool. So that's through the agricultural lending platform Land, LAND, which lends to farmers in Latvia, Lithuania, and Romania. They recorded record lending in May. So despite the platform showing an overall decrease of their aggregation of 35%, decrease in loans, farmers were lending and borrowing. Farmers were borrowing a lot of money. I don't know if that's a good thing or not, but we'll see. Headline: peer-to-peer investors are cautious but eyeing new opportunities. Peer-to-peer investors are showing a cautious outlook to the market, many cutting back their spending and anticipating only modest investment growth. In a survey by RoboCash, 42% of respondents said they anticipate modest growth in their investment income this summer. Meanwhile, 71% said they do not plan to allocate a specific budget to their summer holidays this year, indicating a trend towards more restrained spending. I think that's definitely a result of the economy, obviously. Despite this, a number of investors are looking for new ways to invest, with many remaining optimistic about peer-to-peer lending investments. 59% said they're considering new investment opportunities this summer, while 49% said they plan to maintain their investments in peer-to-peer lending platforms at current levels. Again, this is going to go along with a good email that I got this week about peer-to-peer lending and the state of the market. Let's have a look what else we got here. Lendy sent out, oh, there you go. You can see the sun shining here. Hit the wrong button. Lendy sent out an administration's report, which I did have a quick look through. We are now 6 years into this administration, which began in 2019, if my memory serves me correctly. Of course, Lendy, the defunct UK peer-to-peer lending platform, subject to a lot of controversy and annoyed lenders who have much emptier bank accounts because of Lendy and what has happened. They say here M2, meaning Model 2 loans, the M2 estate is on a wind-down plan, and most matters and realizations within the M2 estate have concluded. Once this wind-down plan has been finalized, it will be shared with the M2 committee for consideration, and once agreed, will be implemented. The joint administrators will know investors in due course. Seems like they are getting close to ending the M2 loan wind-down. We'll see recovers during the period of the PBL loans, only £148,520. So you can see those recovery amounts are getting a little bit less than some of those PBL loans. So I'll go down here. I'll show you. These are people that have not done the AML, the anti-money laundering checks, right? We still have AML verified, have withdrawal functions enabled, 7,923 investors with almost £550,000 of money just sat there because people have not withdrawn. We've got AML verified but unable to withdraw funds because they have not attached a bank account, 133,546. And then failed verification. This is a lot. These people have failed. 1,141 people failed AML, and £737,000 of money sits in the administrator's bank account waiting for these people to do their AML. So if you've not done that verification, go get that done. Unfortunately, 182 people deceased. They died and passed away in between 2019 and 2026, sadly enough. And there's £147,000 of their money in the administrator's bank account. Total cash at the bank right now, £12.9 million. Sad. All that money sitting there. I don't know if it's collecting interest, but hope so. What else? Let's scroll down. Joint administrators' costs and expensive. Look at this to date. We have £8,069,000 in incurred costs going to the administrator and people who are billing, like legals. 3.16 million fees have requested, and 2.75 million has been approved to date for payout. It is expensive to run an administration like this. So a lot of money going into the pockets of the people running the administration and the legals. You can see here the fees that they are charging. It's quite a lot. Let's go down to the appendices. Not to be confused with your appendix inside your body. You can see here the development finance loans right here. Nothing between November 2024 and May 2025 recovered on DFL 07 through PBL 197. Some of the mezzanine loans, nothing recovered. That's probably already done. Most of that, I don't know the ins and outs in every single one of these loans, but you can see really lack of incoming funds. We got £601 from PBL 056, and yeah, look at this. These are all the expenses, wages, salaries. 703,000. Is that right? If I get that right, it's a lot. through that period of the quarterly amount. And let's keep going down to number F. You can see here the recoveries of PBL 193 that we spoke about and PBL 163 and 164, 148,520 pounds recovered. And then these are the total recoveries of all these different loans, the DFLs, development finance loans. I personally had this in my portfolio, number one, because I remember I think it was the first one I ever did. So 1.3 million recovered, and then you can see down here the different amounts that have been recovered to a total 62.2 million. So yeah, that continues to be ongoing. Be a good bet to take whether they manage to wrap that up by the end of 2025. I don't think so. I think it will. Sorry. Yeah, I think it's going to go until 2026. We'll see. I wish it would be all done and over with. I think everybody's kind of tired of it and just like to be done. So we'll see. There's Lend Invest May newsletter that they send out for people who are invested. They posted 7 new investments for May. Average investment amount $112,000, 8% per annum offered, with an average loan to value of 69%. Graphical exposure: Scotland 410 grand, Northwest 254 grand, Southwest 117,000 for a total of 781,000 pounds. And live investments, we can see here 6% are in enforcement. So 13% out of term, 9% in arrears. So they continue to chase after that. Typical target return 7.5 to 8.75%. Pretty good, I would say. Pretty good. There is no secondary market, so liquidity is gained when loans are repaid back into your account. If you turn off auto lend, you get your money back on those loans that repay. So that's how you get liquidity. Yeah, interesting. Let's go to I started looking around a little bit at the peer-to-peer independent forum, and there was somebody that had written a post about getting money back, and that goes along. Maybe I'll skip forward here. Let's go here. This was a letter that I got, an email about crowd property. So Lawrence, help. I've invested in some crowd property loans and now I'm regretting it because I need to access my money. Is there anything I can do? Probably my fault for not understanding what I was getting into. Help? ? Jan. Yeah, this is an interesting question because it really ties into understanding, first of all, what you're investing in. And there are people that do invest in peer-to-peer lending loans and they don't do their research. They don't read sites like Financial Thing and Fourth Way, go on the independent platform forum and really understand that sometimes your investments can be locked up for quite some time and there is no way to get out of the investments. Crowd property is a good example of that. They do not have a secondary market, which means basically your money is locked in until that loan runs in through the system, or worst case scenario goes through administration or default, which has been happening with crowd property. So answer that question, Jan, no, unfortunately there's absolutely nothing you can do to get your money back because it is tied up with a platform loan that does not have a secondary market currently. A lot of peer-to-peer lending platforms don't. This is one of the reasons that I like LoanPad. While you're not going to get eye-watering returns of 8 or 9%, what you will get is a very, 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 very liquid secondary market where you can see here estimated time to sell less than 1 day. Now that is if you are in the access account, which you do not need to give any notice. If you're in the 60-day account, you need to give 60 days. So if you were willing to take a lower interest rate in the 5% range, you can if there is liquidity, and it remains to be seen, of course, long term we don't know, but right now there is, and there has been since the platform launched, you will be able to get access to your funds. The value that comes in that is liquidity, but you're obviously going to make less interest to have liquid access like you would in a savings account that was FSCS protected at probably the high 3% now. With a platform like Crowd Property, you're just not going to get that because they are offering you a higher interest rate, and they do not offer secondary market. Now, there are other platforms that do offer secondary markets, like, for example, Cufflink, where if you want to put a loan up on the secondary market for resale, you can do that. Liquidity is never guaranteed. There is never any guarantee that you will be able to sell that loan, but if the demand is there, you will sell the loan. So something definitely to think about if you are lending. I know a lot of people who watch this stream and the channel are pretty advanced lenders, and they do understand this, but there are some new people who do jump in without paying attention to an exit strategy, and sometimes they think of it like an FSCS protected bank account where they need to withdraw, they can just hit that withdrawal button and boom, they're going to get their money back. That is not to be seen with Crowd Property. Speaking of Crowd Property, I heard from one of our readers that one of the loans had gone into distress. You probably can't see this, but here's a posting here from the forum saying another massive loss for 2-8 CUHGAT. I think it's taking in, I won't even say it. I don't want to get in any trouble. 14.5p in the pound returned from this particular loan, which is obviously run into trouble. I was not in this loan, so I don't know anything about it. But it's an unfortunate situation, but this is just the risk that unfortunately goes along with lending. I'll show you my account here. You can see what I'm doing. I've been withdrawing from Crowd Property for a while, running my account down. Originally had about £3,100 in. I was not a big investor through Crowd Property, but I'm looking at my loan portfolio here. I've seen loan completions paid back, but I always look at these statistics, trying to find where is the statistics. Here we go. This one is the one that I mentioned this a few months ago and been talking about this. I don't think you can see that, can you? Let me zoom out a little bit. So my head, there we go. It's just on top of my head. You can see this is the 12 plus months overdue amount of my now £554 portfolio. So 50% of it now 12 plus months overdue. Not great. I know people who have 2 zeros added on, 3 zeros added on, big monies invested in these platforms who are probably experiencing the same thing. Unfortunate, but hopefully Crowd Property will be able to make some recoveries. And you do have to remember this is property lending, so there are going to be problems. There are going to be loans that are going to go into default and probably will not get recovered, like the one we saw here at a almost an 85% loss. It's part of lending. This is why you have to be diversified. You have to spread your money over lots of loans, because if you try to target single loans and Crowd Property gets the lending wrong, they get the underwriting wrong, which happens sometime, then it happens. Now I want to look at a comment down here. 14p in the pound is, to my mind, a bad day on an 80 to 85% LTV second charge junior mezz loan. Now, if that is true, which I think it is a mezzanine loan, and I have said this time and time again, I do not touch second charge loans. I wouldn't touch it with your money out there, people. I find them exceptionally risky. They offer high interest rates or higher interest rates, sometimes not even that high. I mean, I've seen second charge loans in the 10% range, but you do have that risk of capital losses with second charge. mezzanine loans, so bear that in mind. You're not going to get 10% usually on first charge lending unless there is some risk. Second charge, you probably need to be in the 15 to 18% range. I don't know what the interest was like on this loan to make it worthwhile, but even at 18%, I have no interest in second charge lending at all. Don't want it. Don't like it. Never have. Some people have tried to do it. I think Cufflink has tried to offer mezzanine second charge loans and has decided generally to steer clear of them for obvious reasons. And you know what? It leaves a bad taste in investors' mouths, even if they are willing to take more risk to get more interest. When it defaults, it still leaves them annoyed. Oh, look at this comment right here. This company is uninvestable. So this person obviously invested in that loan, knew what they were getting themselves into, and still now is annoyed by this. Quite rightly too. I would be too. Nobody wants to see a loan getting defaulted, but just bear that in mind if you're looking at higher interest second charge lending. Not only that, are the crowd property loans running into trouble? I mean, look, I'm not there. I'm not behind closed doors. I don't have access anymore to the information I used to have. When Michael Bristow left, I've not had any access to the new guy running the company, so I don't know anything. But when I see this here, it starts to make me nervous. So do your own research, do your own due diligence, stay safe out there, and please remain diversified. Yeah, it's important. There was a Fourth Way article that was put out on the 26th of May. Shout out to Fourth Way. I don't know how many times we have to tell lenders this, and this talks about illiquidity of lending, right? And it says something really important here in this article. How good those peer-to-peer lending providers are at assessing loans and providing you with positive returns doesn't prevent the fact that sometimes you cannot exit early. Indeed, your exit on many loans will sometimes be delayed behind the loan's initially agreed end dates. Often the cause of the delay is because no other lenders are currently looking to buy loans when you want to sell. That's even if there is a secondary market. Well, oftentimes there are not. Often the cause, and then another cause can be the types of borrowers you are lending to are going through a bad period that causes many more of them to suffer delays and the ability to repay. So Jan, you learned an important lesson. Hopefully you didn't put too much money into your loans, but liquidity is key. The stock market, I think, is a great place because there is so much liquidity in most stocks out there. Even in things like Bitcoin, the liquidity is great. If you need to get your money back, you can do that. I've invested through some peer-to-peer in quotes, lending investments where I've had to take, a haircut to get liquidity. So I'll give you an example. Property Moose, old platform that I invested in, moved the money over to the, UK development. I can't remember what it was called. They offered people a discounted buyout twice or three times. I didn't take it the first time because I thought, I'll just roll the dice, see how it goes. And then the second buyout offer, I took it. I took the discount. I took the liquidity. I said, I'll take the loss, write it off on taxes, and move on because I didn't feel comfortable being illiquid and turning down that offer of exit because I didn't know when the next offer of exit would be. And maybe there wouldn't be one at all. Maybe all the money gets stuck in there or, worst case, lose it. So liquidity is really, really highly important when it comes to investing, and especially through peer-to-peer. Let's see, what else? There's another question I got in the mailbag. I'll read it. And again, I don't know if you can see this, but hi, Lawrence. Hope you are doing well. Thank you. Can you see that? Let me do a little zoom out. No. Oh, that didn't work. Hang on. There we go. See if I can zoom in. There we go. I'll scroll over. Hello, Lawrence. Hope you're doing well. I've been minimally investing in peer-to-peer loans since 2020, but have been considering fully exiting. Do you feel like the peer-to-peer sector is growing in any way? I feel like peer-to-peer is shrinking and is mainly made up of old school lenders. I just don't see many new people entering the space. Scroll back. Come on. Let me. What do you think the future of peer-to-peer lending is? Interested in your thoughts. Thanks. Feel free to use this for your YouTube for an answer. Thank you, Trev. It's an interesting question. There was also a post on this on the forum saying, interested to hear fellow investors' thoughts on just why peer-to-peer sector is not larger. This is by Will Smith. It's very rare to come across another investor in person. IFAs seem to stay clear. Landlords aren't selling enough en masse and piling into Cufflink at 8.7% 2-year, while House Martin advertises as business to lenders without the hassle. B2L, business to landlords. A very shrewd friend tells me you wouldn't invest a lot in peer-to-peer due to various risks at 8 or 9%. It hardly matters as your sums are pretty low. He has a point. Interesting in views. Scooter says, peer-to-peer has been good to me overall, but it was an experience worth trying, but not repeating. Just when I think I know all the pitfalls, sneaky terms and conditions to watch out for along comes assets capital. The FCA should have got to grip on these things earlier. Platforms can still act like weasels, relying on laughable best interest rules, which may as well be the only terms and conditions. Something needs to be done about can kicking to keep no loss of capital status. Cufflink, personal guarantees with no substance. Cufflink, false or lies by omission communication. With investors, Cufflink, don't understand why you like them really, but they are not the only ones. Yeah, and it's an interesting thread, and something that comes along with this question is why is the sector not increased? Why are we not seeing growth? Now, going back to LoanPad, as I showed you earlier, they have increased their lenders by probably to 250 people. But it generally seems to me that everybody I know, nobody talks about peer-to-peer lending. Nobody understands it. There's a complete lack of education, lack of content about it on the internet. Even if I Google right here, peer-to-peer lending UK, you'll see I'm in the US, so I'm going to get different results. But there's a couple of videos. I mean, the first video that comes up is 6 years old. Some of these are European, like this guy right here, best performing peer-to-peer lending platforms in March. He's really an EU guy. But then if we start to scroll down not too far, we start to see Funding Circle reviews, Money Unshackled 2019. There's one from 2024. Then we get 2017, 2021, 2016. All of this content is just really old, which goes to show me that even here, the Financial Times, they've got a peer-to-peer lending pros and cons article from 2015. So there's just no education on peer-to-peer. It's not widely advertised. It doesn't feel to me like it's attracting new investors. And I think that Trev has a point when he says it just seems to be a bunch of OGs like myself who continue to, in some cases, let's leave their money compounding in older investments. And that's pretty much why there's no growth, I believe. Maybe there is some growth. It's hard to say. I mean, obviously, if companies like Folk2Folk are making 1.8 million in gross profit pre-tax, there's growth there. But it could also be the fact that if you look at LoanPad, 6,000 investors over the period of now coming in year 6. If you were to see 20,000, 30,000, 40,000, you would say, wow, there's definitely a lot of growth there. But it seems to be a very, very slow growth business. Thankfully, I believe that company like LoanPad is doing things correctly. So there are some good peer-to-peer lending companies out there. The problem is all you got to do is invest in one bad one and get wiped out. Hello, collateral. Hello, Lendy. You lose all of the profits, all of the interest that you've made throughout that period of time in one foul swoop. And if you're unlucky enough, like I was, to invest in 3 or 4 failed platforms, and there are a lot of failed platforms out there, you're going to probably be in the red for a pretty long time. So if anybody is out there doing their research on peer-to-peer lending and they're savvy, which not everybody is, but some people are, they're going to look at the history of peer-to-peer lending and say, I don't think that that's something that's for me. I don't think I'm willing to take the risk in privately owned businesses run by, CEOs that can make decisions that would negatively affect my investment. I mean, I guess the same could be said about privately held companies that you're investing through, even publicly held companies in the stock market. Look at Tesla. But it's not going to be a point to where the company likely goes bankrupt and where you could lose most or all your money. So I think that's why peer-to-peer is certainly not seeing really much growth at all. And even if you look in the news, aside of crowdfunding site, we got FinTech Magazine, Money Magpie. You just look at the news stories, and there's stuff from April, February, December last year. There's not a ton of information, so it's just a quiet, very, very niche industry. And I think that's going to be the case until education really starts to ramp up. You can see here these articles are just older, 2024. Google should be showing new articles on news if there was news to be told. Obviously there isn't. Anyway, let's moving on. Quick interlude. If you can hit that thumbs up button, I'd really appreciate it. Thank you so much. Thanks for tuning in. I hope you're enjoying the content. Trading 212. Let's see where we are. 29,873 pounds. We had a sniff over 30,000 last Thursday, a week ago. Sorry, no. I take that back. This Thursday, today at 1 a.m., we sniffed over 30,000. And then I've taken a bit of a downfall. So we have gone across that 30K mark. We've had a pretty good week, actually, 1.8%. We are 5.6% in the green for the month and 8.7 for 3 months. So, hey, are we beating the S&P 500? We sure are. I believe so. 1 year, 13.9%. I've still got this little bit of cash here, which I honestly have no idea what to do with it. I just totally forgot about it, and when things dipped a little bit last week, I just didn't put it in, and now I'm stuck on the sidelines. Really not much. I mean, we're talking about 2% of the portfolio, but needs to go in somewhere. Where would you put it? If you had 619 pounds of cash in your stock trading account, where would you put it? What should I do? Let's, we'll take a quick look here. MicroStrategy 7.5% plus in the green. S&P 500 1.5%. Not much traction there, but it is kind of towards those, I think, all-time highs. Not quite, but we're getting close. 93 pounds was the all-time high. We're at 85. Nvidia plus 50%. Look at that. Just sitting and doing nothing has been a payoff, because see down here, you could have gone in at 96 US dollars, now at 155. That was just back in April. So that's what they say. Dead investors make the best investors, people that don't make any changes. And then Amazon 13% in the green. Tesla were down 7.8%. This is an interesting email I got from Octopus Energy on Sunday the 22nd. I don't know why it says 22 ST, typo. Between 2 p.m. and 3 p.m., They gave you free electricity. Imagine that. For an entire 1 hour, you could turn on your heat, charge up your electric car, run your dishwasher and your washing machine, turn on all the lights in your house just to piss them off, and boom, you got everything free for that 1 hour. So kind of a little marketing gimmick. I don't know what that's worth. Maybe it is only worth a few pounds or £2, who knows, but it was cool. I thought it was a cool marketing thing that they did. A little bit of Bitcoin news, because I always do this. Bitcoin price right now, probably can't see this, was 107,319 US dollars. So continuing to hold the line, even through a war out in the Middle East. We've had a couple of interesting pieces of news this week. There is going to be, it looks like, a Trump crypto ETF, which is crazy. Trump Media and Technology Group has applied to the SEC in the USA to list an exchange traded fund. The proposed fund will hold Bitcoin and Ethereum. They've done a $2.5 billion fundraise from institutional investors to create one of the largest Bitcoin treasury allocations by a public company. So, what does that mean? It means that they're going to be holding physical Bitcoin. This is they are just following suit to what other companies are doing out there. So this is what I believe is going to be the future. And also, by the way, people sometimes ask me, well, can I do this in the UK? Because you can't buy Bitcoin ETFs in the UK currently. I think that's going to change soon. But there is a company out there now. I don't know why. Let me see if I can find it. This company right here. Not financial advice, called Binance, but this is a UK Bitcoin treasury company that buys Bitcoin. You can see here, raised $3.6 million via retail offer. I don't know. I've looked at some of their questionable, maybe people that are running the company, but I don't know for sure. I'd have to do more research. But if you wanted to get exposure to a treasury, publicly traded treasury company in the UK, you can do it through this company, Binance. They've had a really good 3-month run up. Even today, they're up 16%. You can get in there for 29p. Super cheap. It's down. Look at this. It was up to, where was it? I thought they were. Hang on, this is not what. Oh, look. It was up at 44p at one point, so you can enter a pretty big discount. But I do think in the UK you'll be able to invest in Bitcoin ETFs soon enough. But right now, Mr. T is leading that way. Also, another news. Let's see. The Trump administration moves to count cryptocurrency as a federal mortgage asset. The Federal Housing Finance Agency is working to let borrowers use crypto as part of their federal mortgage applications without converting it to cash. So essentially, and this was a newsletter, or what do they call it, a media post that they issued. So this is real. They said this is an order issuing a directive to consider cryptocurrency as an asset and risk assessment. Cryptocurrency has typically not been considered in the mortgage risk assessment process for mortgage loans delivered to the enterprises without converting the cryptocurrency to US dollars prior to loan closing. The U.S. Federal Housing Association has determined that the consideration of additional borrowers' assets in the enterprises for single-family mortgages may enable the enterprises to access the full spectrum of asset information available for reserves to facilitate sustainable home ownership for creditworthy borrowers. What the hell does that mean? Basically, it means that people that hold alternative assets like Bitcoin, they would look at those assets and say, you can use that as collateral or on your credit as a way for you to be able to qualify for a mortgage. That would be, seen as, well, let's say you have $10,000 in Bitcoin. that 10,000 would go towards your qualification as you being financially able to qualify for that loan. Now, that's a big deal. There's a couple of things there, though, that I think are interesting. Number one, it's a big deal to see a big government agency like that saying, we want you to consider, and this is to Fannie Mae and Freddie Mac, who are the big mortgage entities here in the USA, we want you to consider these assets as being part of that application. That's really big. Now, whether or not Fannie Mae and Freddie Mac decide to do that, that remains to be seen, because it's a directive to consider cryptocurrency. And I've seen some things on the news, people saying, oh, they're going to do this, and I don't agree with that. It's saying it's asking Freddie Mac and Fannie Mae to consider it, so they can consider it and say, no, we're not doing that. But it also is showing how these crypto assets, and I don't know what they're going to consider a crypto asset. Are they going to consider the 10 million shitty coins like Fartcoin an asset, which I don't? Or are they going to say, no, it's pretty much Bitcoin. That's going to be the asset that we'll consider. I don't know. We'll see. Then maybe they'll say no to everything. But when you see things like this happening again, it's a pretty eye-opening roadmap of the way that things are going in the cryptocurrency world. You know, we first saw the release of Bitcoin in 2009. So for a lot of naysayers out there saying, it's risky and blah, 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 it's been around now for 16 years. And it's obviously one of the best performing assets classes out there. But it's getting some real national government attention. And of course, Mr. Trump is profiting from it. And don't believe for a second that there's not a reason why he's releasing his little Trump ETF, because obviously he's going to make a lot of money. But there's a lot of national attention on these things right now. Could it all crumble? Of course, anything is possible. Kodak crumbled. Nobody thought Kodak would ever crumble, and it did. So yeah, possible, but really interesting to see nonetheless. I love little bits of information like that. This is not peer-to-peer lending, I know, but it's fascinating stuff to see where things are going. Kind of like, the internet, right? It was started up when it first came out. If you're old enough to remember, like me, I remember the internet coming out. I remember getting on ICQ and dial-up and painfully slow internet, and look where we are right now. We're able to do things like Livestream straight through, right? To you live from a house. We couldn't do that before. There was only television stations could do that live, and we're able to do that. And look at computing and AI. Things are progressing and roadmaps forward, and I think the same is happening with financial assets, and I think it's super cool. I really do. And I would definitely tick my yes box to crypto assets being considered as assets backing mortgages. I think it's a no-brainer. If you have any type of money invested as you would in a stock, it should be considered an asset. And I think it's cool. I think it's really cool. So, yeah. Well, it's 8:20, almost 8:20 p.m. in the UK, so we're going to probably wrap this up. Chimpo Naughty is here. Peter Vint says, hello, Harley. Yes, Harley is, I don't know if you could see her. She's down there having a nap. Evening from Nottingham, Peter Stephen Hale. Mike Powell is here. Annabelle in sunny Spain. Am I allowed to bet on? You can bet on anything you want. I'm sure you'll find some degenerate in here to take your action. Mr. Heliums, don't need to read forums. Pretty much every peer-to-peer website contains a risk warning. Yeah, some people don't read these things, though. That's the crazy thing. Yeah, that's definitely their fault. Hit that thumbs up if you've enjoyed the stream. Subscribe. Tell your friends and family about the stream. You can get your money earlier from the 60-day account and loan pad with a penalty. That is true. You're completely right. My crowd property inbox needs a bit of clearing. Yeah, I didn't even know you could delete messages. Mike Paul said it wasn't a second charge. That loan that went bad on crowd property was a first charge. Ooh. So what is that guy talking about? Who knows? Promoting and pimping the forum. Yes, I am a pimp. Make more content, Lawrence. Believe it or not, this is not my only, this is not a job to me, but this is not my only endeavor. And unfortunately, content creation takes a lot of time. These streams, by the way, just so you know, take me about, with the research and the 1 hour, so it's a 4 or 5 hour thing for me. So yeah, it's not so easy making a lot of content, but I do try. I do have a new video in the works, but I've been editing it, about Investengine, so be on the lookout, hopefully within the next week. P2P is a changing. It is. There's less profit in development and bridging loans, more difficult to secure as some of the property is so close to the sell price. Agreed. British government announcing a housing bank, cheap money for house building. This won't help P2P. Okay. We're going to wrap it up. Thank you to everybody for joining. I hope you guys have a wonderful weekend. Thank you. It's always very humbling that you come here and spend your precious time with me on a Thursday. I've definitely been thinking about what to do with the stream. A part of me is thinking, should I continue this stream? I'll be honest with you. I've been thinking, it's been 5 years now, and my goal is always to have more guests on the stream. The problem with the guests is not, a lot of the times this time doesn't work for guests, so they can't always be here in the evening on a Thursday. So I thought, well, what do? Should I stop doing it live? Should I just record the videos when I can, put them up so people can watch them whenever they want? It means I can take more guests. I don't know. I don't know what the answer. I've been contemplating it, but I like being here with you. So as far as it goes for now, I will be here with you. And I appreciate your continued support. And thank you to everybody who is a Patreon subscriber, because it does help pay the expenses of the stream, of the stream hosting and the stream software. And I don't make a lot of money off this, so I do appreciate every single one of you support. I spilled shake juice all over my computer keyboard, but so anyway, I don't know what's going to happen with the stream long term. I hope to be able to continue it. I do want to have more guests here. That has always been my goal. It's the most difficult thing to schedule, but I'm trying, so hang in there with me. We'll see what happens, and that's really all I got for you this week. Okay, have a wonderful weekend. Enjoy the nice hot weather, and I'll see you next time. Take care. Bye.